Good afternoon, everybody. Welcome to the weekly general update for the 10th and 11th of September. And as usual, we've had a very eventful week, and I'm sure we're going to have a very eventful couple of months because typically September and October can be the most volatile months of the year. So I think we're going to see lots and lots of action in coming weeks. Just a reminder that this is general information only. You need to make sure that any trades that you take are consistent with your trading plan and that the decisions you take are fully yours. So let's have a look at the action for the week. The S&P closed down 1.7% for the week, which was better than some of the weeks that we've had, but pretty volatile, and basically most of that loss occurred on Friday night. In fact, all that loss occurred on Friday night. So it was pretty much all over the place. We saw some strong rises early in the week, only to lose all that gain. The ASX 200 outperformed the US market yet again. It was down for the week, but only by 1%. So what I spoke about probably a month or 6 weeks ago, which is since Bernanke announced that they were going to hold interest rates at effectively zero for 2 years, that was pretty much the green light for hedge funds to start shifting money out of US equities, out of the US Treasury market, and look for a place overseas where they could get a better return. Gold closed higher, about 3% on the week, or about $56, but again there was a very substantial range in gold, and we did break some key resistance levels along the way to form a double top. So I'll be looking closely at the gold chart and where I think the price might go in the near term. Silver closed 5% higher for the week, so and I think silver's really on the cusp of starting to really outperform against gold, which is what it should do. Pardon me. Okay, this is a chart of the Silver Etf, which I've been recommending we start accumulating. And this is the chart over the last 12 months, but just zeroing in a little bit closer, this is the chart over the last 3 months, and you can see that we did move higher over the last few days, and the price is holding above this 30-day moving average quite well and trending up. So we've basically trended up from the low 30s to about $40, and you can see some pretty good volume coming through as well. So just as a bit of a summary of the strategy before we get onto the charts, to me, stocks, the trend is down to complete the correction. Obviously we're not quite clear in terms of how what the down will actually look like, but I think we're certainly going to see some more down. So we're looking to short sell into this decline, which we've already got some of for members, and we need to prepare to buy for the panic sell-off, because if we can start to pick up BHP and stocks of that nature at the levels that we saw in early to mid August, then we can make some seriously good gains very quickly. Gold and silver, the main trend is upwards, but we're looking to accumulate progressively because it's so volatile, and I'm not convinced that the correction in gold and silver is complete yet. So all we can do is just start to accumulate. But certainly the gold and silver stocks took off in the last few days of last week, and that's quite often a leading indicator of where the price of the underlying commodity is going. So let's hop over and have a look at the charts, and we'll start first of all with the S&P 500. You can see, if we pan back, that we have clearly gone into a downtrend. You can see the red 50-day moving average is strongly trending underneath the 150-day, and the price is well underneath the 50-day moving average. So there's no question we're in a downtrend. It's just a matter of the nature of that downtrend. I think on a bigger picture level, you can notice also here too, we've got a downsloping trend line which we got close to on Thursday. That trend line was around about 12.10. We got to a peak of 12.04 before the price has turned back down again. I think on a big picture level, we're looking at, this is our A leg correction to there. We've seen a fairly erratic B leg, but that's probably it there. And we're now in the C leg down on a big picture view. So that's my basic premise. So let me just take those off there just to clean this up a little bit. So then the question is, what is the nature of this C leg? Will it take us back down to around about the lows of August 9, which is about 1100, or will we actually go below that? Or will we in fact retrace a larger portion of the whole run which started in March of 09 with lower levels at around about 1020 and then 936. So if things get really ugly in Europe, then 936 is a possibility. But I think at this stage we'll just take it one step at a time. So I'm expecting around about this 1100 level, although markets have had a habit of overrunning support and resistance levels just a little bit. So we could say maybe 1085 to 1090, somewhere about that area would be the first point that we'd look at. Then we'd look at 1020, and then if that broke, then possibly 936, depending on the severity of what happens in Europe. Now, given the strength of this downward leg when this really first broke open in July and early August, I wouldn't be surprised to see this C leg to be, quite significant. So let's have a look at how this C leg may play out. It certainly won't go straight down in a straight line. They just don't do that. So it's possible that we've seen 1, 2, this is possibly go down in a 5-wave structure because the trend is down, so therefore it's more likely that we'll get a 5-wave structure to the downside rather than 3. So it's possible that it could look something like this, but this is really just a bit of conjecture on my part, but I think the pattern will be something similar. So we could get something that looks like this, or we could get something that's a bit more severe. Or it's possible, if they really crank up the money presses in Europe and the States, that in fact we won't get significant downside, that in fact we might just see a deterioration into a bit of a sideways wedge for a period of a few weeks. So that's the S&P 500. Let's have a look at the Australian market. This is it on a monthly chart. We will see the Australian market probably down by at least 50-60 points on Monday, so that will bring us down into this 4100 area. So we look like breaking the lows of July and May of 2010. We're not oversold on a monthly chart yet, so I really think we are still going to see a little bit more downside in the Australian market. Back down to 38.20 is a possibility. Let's look at this on a weekly chart. On a daily chart. You can see that we've clearly got a downsloping trend lining happening. We did have a break of that channel in early August. Since then we've gone sideways. The Australian market has been proving a little bit more resilient, but I would expect that at some point we are going to see this bottom of this trend channel get tested, which at the moment is probably sitting at around about 3900. So I think that will be our guide where a possible buy area might be. Now the finance and materials index have pretty much been following along with the ASX 200. So I'll just have a look at the small ordinaries. And you can see that the small ordinaries index has remained very buoyant. In fact, if anything, there's a little bit of an upsloping trend line happening there. So small ordinaries has really done superbly well. And we're seeing a lot of the gold stocks really take off now. Let's have a look at copper. This is copper on a weekly chart. We did see a dip on Friday because the US dollar really did kick up on Friday night, and I'll show you that chart as well. So that did impact on those particular stocks, or on those particular commodities, I should say. So let's just have a look at the US dollar. So copper closed down just basically on the $4 a pound mark. So you can see here the US dollar over the last 3 or 4 sessions really has taken off, and that's because the euro is getting absolutely thrashed with all the concerns over what's happening in Europe. So we could see the US dollar push up higher, and as a result of that, it's interesting just how resilient gold and silver were when you consider how far gold went up. Let's just have a look at the VIX index, which is the fear index. So you can see it has really started to kick back up again. So we're not getting the decline from the peak that we normally get. So I think there's some more substance to this downside yet, with the VIX starting to kick back up. And finally, let's just have a look at gold and silver. Okay, this is gold on a daily chart. You can see very strong uptrend. We needed a correction. I thought we would get an ABC correction. Here's the A leg. The B leg I expected to finish about here, but in fact it pushed up and actually formed a new high. So, but let's just call that a double top. So it's possible that correction is now complete, but it would be much more likely that we still get a completion of the C leg. So I still think we've got the possibility of that kind of pattern playing out. A here, B over here, and then C into here. So let me just take those off. Now the question is, what does this C leg look like, if in fact that's what we're getting? Now I think there's probably one of two paths. We're either going to get, this is A, this is B somewhere along there, and we get something that looks like this. That's one possibility. The other possibility is that we just get a bit of a sideways deterioration that just kind of forms out like this. So we just get this sideways choppy mess for a while, and then then we head up higher into the main final thrust up, which could last the next couple of years, and could take gold to, you know, pick a number, but probably something in excess of $3,000 or $4,000, and could be considerably higher depending on what happens on the currency front. So the only way to deal with this volatility is to be progressively accumulating, and that's what we're doing. It might mean in the short term we're a little bit underwater on some of our gold and silver exposures, but I think that's the only way to play it. The more I look at this situation, the more I'm convinced that gold and silver are heading significantly higher. Let's look at silver. We were down a bit on Friday night, so there's a little bit more sideways there, but I really think silver is getting very close to outperforming gold. So that's it for the general update for this week. I think we're moving into a really exciting time. I expect to see a lot of volatility through September and October. Quite possibly see equities in general lower, which will set up some great buying opportunities, allow us to cash in on some of our short positions, and of course gold and silver probably heading higher during that period as well. So that's it for this week's update. We'll talk again next weekend. Cheers.